Tomorrow, we get a good July CPI report. I think it is going to tilt the market's risk on, and I'll explain more fully as we go through this video. But here are the 4 things I just want to put to place for you that's a setup into tomorrow. The first is that the July core CPI, if it comes in at less than 0.25 month over month, that's going to be good enough because it's a vast improvement over trend. The second is there's the possibility of the Iran war risks being pushed out or delayed, which relieves some pressure on the markets. The third is that the VIX looks like it's normalized. And fourth, I think that the panic of last week is subsiding.
Wow, what a move. It is Thursday, August 15th, right around lunchtime, and the indices gapped up after going straight up for almost 2 weeks. And every investor is asking, is that it? Is the growth scare over? Is the yen carry trade unwind over? Of course, I don't know. The only thing I do know, in hindsight, is that the gap at August 5th could have either been an initiation gap or an exhaustion gap. It was an exhaustion gap, and now the question is, what kind of gap did we see today? When you look at the weekly chart, it looks like everything negative was priced in by an exaggerated move to the downside, and when we were down roughly 10% from the top in the S&P, buyers stepped up and never looked back. Tom Lee mentions the VIX, the fear gauge. And as of today, the spike in the VIX at August 5th tells us the same story. An exhaustive overreaction, and after that the VIX fell even below the black trend line that formed itself for the last few weeks. If the VIX will stay below the orange 200-day moving average, it is very likely that we just witnessed a one-day growth scare, and that the bull market that formed in the fall of 2023 will continue.